The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday, Tuesday, Wednesday, Thursday, and Friday, 11 o'clock till noon Eastern Time. And I will be doing, I was able to organize it just a short while ago. I'll be able to do Larry's show as well today. So I'll be on for 2 hours. And in the 2 hours, we're going to be able to cover a chunk. Why a chunk? We need to do a chunk. We need to do a chunk because I have now reached a point in my listening to comments, both anecdotally, first-hand, third-hand, just about everywhere, where the consensus is that the folks who are in the, it doesn't have to be the retirement age, but folks who are in the most defensive area, portfolio-wise, in bonds, and have been for a long time, who have seen absolutely unbelievably crushing low interest rates. When I say that, it means that historically, for generations, one has been able to buy bonds as protection. It was usually it was spoken about in terms of the most offensive area for widows and orphans or something like that. I'm not sure how that expression ever came about, but the concept was that bonds were a safer way to invest with security because there was a very nice dividend and you could rely on the dividend. You could get those coupons, you could rotate and roll in and roll out and do work with that very important sector. For a great deal of time, and we've spoken about this a lot. You remember I spoke about for about 10, 15 years. I was talking about maybe 10, 12 years. No, yeah, let's call it 10, 12 years. Certainly ever since I came on TFN back in 1993. I've been speaking about the eventual chance that eventually we will Japanize our bond yields, meaning they'll, like Japan, they'll go down to 0%. And then the analogy became spurious in the sense that, yes, we've got virtually the 0%, very, very low, let's put it that way, but Japan never even came back close to even the 50% retracement of their 38,000 all-time high back in the long weekend of December to January the 1st, or it was the 4th, I think, when they got back to work in 1990. And then we have done something even more creative in that Bernanke went out on a limb, and it was a limb that not only had never been tested before, I'm not sure it was even discussed in theoretical terms as a viable entity, and that was just to flood the market with dollars. Dollars, 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 dollars. And to have as a specific purpose a three-prong target. One was to generate lower yields so that the housing market could come back. One was to produce lower yields to force the public into equities. And the third one was to have a resource as long as there was ink, as long as there was the capability and the capacity to produce ink, to fill those printing machines, we could keep on pumping the market with basically free dollars. And that has produced something, and it came to a head yesterday when I was at a meeting, and it was just out of curiosity. I just wanted to hear something about the outlook on bonds from a major institution, and the belief Now, I'm guessing that the age group of the two speakers was in an age group that put them in the category that they were maybe born at the very moment that the mega bull market of the bond rally began. So let me just do this. Let me go to the black charts. Let me go here. Let me just put in at US.P. Squeeze the chart as much as I can. Squeeze, squeeze, squeeze. Here we go. Squeeze, 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 squeeze. So that started in 1987. My suspicion is that so let's go. No, actually, I shouldn't say that. The channel started in 1987, but 1981. So in September of 1981. So that's 32 years. You know what? I'm guessing that they were born right at the beginning of this. So they never knew anything about bond yields at 16, 17%. So let me do this. What I'm going to say is that they discussed it as if it was such an inevitability that bond yields would remain low, not just for the foreseeable future, but they were really looking out and they were basing it on the studies. Now, the reason why I brought the age up is that, you know, a lot of people did not get back into this market, and that was verified by numbers that I heard. A lot of people never got back into this market after 2009 at the lows after that period. Going into the period, they got out, and they haven't really gotten back in any substantial way whatsoever. And I always talk about this as the generation that has history behind them. If you've lived through a couple of crashes, you've got a little history. If you lived through 1987, you got a little history behind you. And that's always sitting there. But if you never lived through it, what do you know? Well, you know that crash, the flash crash, but look how quickly we came back after the flash crash. So, in fact, in some of the flash crash charts, I just X out that whole data as if it didn't even happen because it interferes with the ChapmanWave methodology, and it was an aberration. Yes, the price did go there, but in some cases, they did not go down to 0 or 1 penny. There's no way. So I X them out. So I'm listening to these guys, and they, cogent and a lot of details, and really it was very interesting. But there wasn't that perspective that said, wait a minute, in other eras, in other places, in other countries, you might have gotten to almost 0%, but there was another aspect that said that inflation can go rampant, and they didn't bring that up at all. And I say, okay, now I've got history on my side, and I'm going to look at this and say, hey, I remember when you had to go to the post office to update stamps because there was inflation, the whole period of the late 1970s, early 80s. Hey, anybody remember that? So I wanted to throw in here the perspective that today I think is a very important session. It's an important session because I think that shorts got really squeezed and they got out, and we could still go slightly higher in the stock market, but I think we've just the stepping stone that says consolidation is about to come, I think is right here. Now, I'm not talking about 1%, I'm not talking about 5%, I'm not talking about 15%, I'm not talking about 20%. I won't know, but I think I will have a great idea on Friday at 4 o'clock, and by the following Friday I will have a great deal of evidence towards that. Now I'm going to go through the charts and discuss a whole bunch of things, and then we'll take calls. So let me go back to my white charts here, white background charts, and let's discuss this. So the Qs, the E-mini Qs are at leg C. Look at those bars. This is just, if you can get in, I keep scolding myself for having got out of our long position of the Dow when I did not have a peak established, because this leg up is the leg that strains credulity. It goes up And that's what the NASDAQ has done. And the Qs are a little different. The Qs are in leg D. There's no question about that. That's leg D. But this pattern here is awesome because it says either you're going to get one bar that takes out about 10 or 12 sessions because it's so ugly, or you're going to get a U-shaped pattern that just freaks out shorts because it does not come back. It does not come back at 74.57 on the Qs. It doesn't come back to more than maybe 73, 76, 73.20, the support levels, and then it goes right back and makes a retest, and that will give you leg D in the Qs in the futures contract. That doesn't have to work. But this is what I'm looking at here. I wonder if I've got an updated NDX chart here. And NDX, oh, I haven't done that. So let me just do it right now quickly. There's the trough. You always look, remember the ChapmanWave methodology? Always look for the trough. This gives me an opportunity to talk about something else. Oh, yeah, this is D. This is exactly like the Q. So it's only, all right, the E-mini futures, the NASDAQ, I'm putting that secondary to these other indicators. Leg D up in the NDX, leg D up in the Qs, E-minis, ES, M113, still using the M contract, June contract. Leg E, stochastics pulling back to 90%, 92%. MACD, no sign yet in the MACD of pulling back. There again, we might be looking at a cup formation. But when I say that I'm looking towards some kind of a consolidation, as we speak, that spike and pullback with a Bernanke testimony. What did he say? I wasn't listening. Did he say something? He must have said something about the time sequence for the change in the QE, and we'll see what happens. So now let's look at this. We've got the E-mini 120-minute chart went to a leg E, and now I think it's going to make a peak E, just as there was a leg F in the NQ, 120-minute chart. I'd like to synchronize these two things. Yeah, leg F up. So is this a top of significance? No, I don't think so. Is it a moment of significance? I absolutely think so. I'm going to go into other aspects as well. Now, let me just do this because I'm liable to forget, and I will take callers. Let me run the numbers. Dow's up 80 at 15,468. It hit, in fact, a high of, the Dow hit a high of 15,542. Isn't that amazing? Let me just do this. I want to see what's happening with the other indicators. Volatility index is in leg C in the 120-minute chart. 120-minute chart daily. 120-minute chart. Dow is in leg E up, and here we go. Let me go this. +6 in the S&P at 1675, +15 in the comp index. Gold is down 3. I think gold's making a change here, 1374. I think the dollar is at 64.31. Bonds are down 0.5 point. I'll be back because there's a lot to talk about. I'm back with Travis.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi everyone, Basil Chapman, Tiger Technicians Hour, and I just wanted to finish up that thought, then I go to our callers who've got the dollar. I need to look at the dollar because it's really important. The dollar's had a nice spike up. It's trading at 84.28 in the futures. I'm a little behind here. But at 84.37 in the index itself, that was peak D. And if it spikes sharply above, now this is what I'm trying to put together here, is that if I've got a peak D, even if it goes to an E now, and the dollar, actually, let's just say the dollar pulls back and it pulls back underneath 83.30, which is really key support. Will gold go up? And my question to subscribers this morning is, yesterday and today, you would expect that if the dollar comes back down, that should help the market. Well, the market's at a point where it doesn't really need any help. That's number one. Number two is, if the dollar goes up, how does it impact the market? How does it impact gold? My thinking here is that gold has a chance to make another arch formation. So I just wanted to go through these things because we'll elaborate. I'll have Larry's show. We'll do it in the next hour. I'm going to be going through it in even greater detail. But it seems to me that the GLD did not break underneath 130.51. That was a climactic volume low bar spike. And we've got the 26 sessions, which is still not right. I said 28. It's 26 today, I think, maybe 27. that hasn't broken the 130.51 low bar. This pattern is a very familiar pattern. I don't like the weekly too much, but it should create some kind of an arch formation going towards the 138 to 140 area. How does that fit in with the dollar? Well, the dollar's got a lot of strength in the technicals. So I'm going to come back to that thought. I'll leave it hanging right there. There's a lot going on right now. I believe that we're looking at the last of the bears throwing in the towel at this particular point this morning, especially with Bernanke. That was, to me, that was an artificial spike based on technicals that weren't failing but have the potential to fail right now, because I did not see the veracity, the strength that accompanied it in this last move up. I'll be watching it real closely. So we're going to go to Travis in St. Louis. Hi, Travis. How are you?
I'm doing well. Good morning, Basil.
Good morning. So you want to follow up looking at INSM, and that was a position, and I said we had spoken maybe just a little lightening up yesterday if you wanted to do that. I don't know if you did that, but today it spiked up. It went even higher to 12.98. Folks, INSM is InSmed. What did we say they do, or did we say?
No, they're a biotech. They've got a drug that is awaiting approval, possibly as early as June, maybe into the later half of the summer.
Okay, good. Biotech. I thought it was a biotech. Now, it's really interesting because the biotech sector, I've got just a real big watch on this sector here, because I believe that they are in the process of forming some kind of a top, and yet the proof of the pudding normally would be in any any large sector that's really on fire. Are they starting to get a little toppy at the very same time that you're starting to see the low-priced stocks in that sector start to have really big moves from the $3, $4, $5, $6, $7 area to 50% or even 100%? Well, this fits that category. It went from $2 and what was it, 56 cents, $2.64 back in November of 2011, and now it's trading at $12.97. So in that regard, it's a leg C in the monthly, with the technical starting to confirm. So I love the fact that it's testing the $13.50 high back in June of 2011. So far, the high is 13.35. So got 15 cents to go, and that 15 cents is important because 13.20, and it's above that. It's been above that. 13.20 is the high back in March of 2010. So a lot of it says it's making a cup formation, and what I'd say to you is, if there was a chance at all that it could get into the middle of the wick of the candle of June of 2009, 2009 is 4 years ago, then there's a very good chance it wants to test that high, and that high goes all the way to 25.70. All-time high, what did I think it was? We said it was something crazy. Yeah, all-time high was 199.38 back in August of 2000. So, you still got your stock, right?
I sold half of it this morning, and I'm debating on what to do with the last half.
Excellent. Okay. That's a great position to be in. I'll be right back, folks. Let's look at the stock together. INSM.
TFNN is excited to launch our brand new software charting program, The Art of the Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, Art of the Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. Art of the Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at tfnn.com. Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of tfnn.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of tfnn.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of tfnn.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Now, folks, we're back. Basil Chapman, Tech Conditions Hour. Dow's up 100. S&P's up 9.91. I just wanted to see something. Now, that's really interesting. Gold is down to, it was up 15 or 17 points earlier in the day. It's now down 2. It's looking at now that's really interesting because silver's up 0.08. I'm going to be watching this real closely because as long as the dollar technicals are looking good, it's going to hold support. But the pattern of that the H that goes to an M pattern in the GLD is going to be the most important thing that I can look at in terms of, is this just going to be a little pop to make a lower arch in the gold? Is going to be a bigger one? And then how does it reflect on the market itself? Are we now solely independent? It's just the volatility index of 13.36 that we've got to be looking at of the 3 bears, VIXI, Dolly, and Bondi. I'll be back right here, and we're going to go back to Travis looking at INSM. Travis, I just did a left side, right side price time match in the ChapmanWave. Now, basically, what I want to look at here is to see whether or not, you see there was a move back in the end of somewhere around March, April in 2011, where there was just two legs up in the weekly chart. It looked like a great buy mode because the MACD went skyrocketing. The stochastic was up in the over 80%, even went to about 87%, and then it made an M formation and broke down. That's what I call, that's almost like a right arm extension. In my ChapmanWave methodology, what I talk about, I think I've got it here. Yeah, the right arm extension is really important because what happens is it can go up, but very often it happens to go up after a big move. So now what I'm looking at is there's another pattern, and that is it's the inside wedge that I talk about so often. And that to me is what you really need to be focusing on. I've got it here. I want it in the cup formation. Cup formation, let me see. Cup formation, I think that's chapter 15 in the CD. Yep, there it is. That cup formation is very important because that's what I'm looking at. If I'm showing it right here, that it goes from the left side, this is a cup. The one we're looking at is more like a flat-based cup, like a bowl almost. But what happens is you can draw channel lines, but the inside track, the inside wedge is really what's very important. And that can help you look at the chart a little differently. And now I'm looking at it and I'm saying, ha-ha, I've got an inside wedge. I've got a left side, right side price time match from the high of the week of the 17th of June at 13.50 down to the most recent low. I believe that's the low of $2.66. Let me just double check it. $2.64. Oh, that was the failure. I remember that. I did that in the black charts yesterday. So that's A to B minus. And then a restart, A to B minus, and a second restart. And when these things do kick off, they are very powerful. It's what I call the restart where, look, it's almost like the H pattern, something like we're getting in the dollar right now, and then it successfully retests 2 cents higher in this case, and then it starts a very nice move to the upside. Starts off flat, and then it goes higher. Well, what I'm looking at is in the left side, right side price time match and the inside wedge target line, it kind of goes to the week of the 12th of July. Well, we've already gone to 13.35 in INSM, which is INSMED Inc., and the high that we're looking at is 50. So you've got 13.50 to go to, so it's 15 cents. If it breaks out above that level in a shorter time span, that's going to be very positive, and what it immediately does is says, great, now you've raised the base, even though it's leg D, you've raised the base to about the previous consolidation level. That's right there, which takes it to about 1104. So when you're looking at a longer-term situation and you've already got yourself into the very nice condition of taking half off after a very nice gain, I'm going to recommend that this last half that you have, it's always tough with the last half because it's the part that you say, gee, I wish I had another half because now I can lighten up again and I can put my stops and I'll still have a core position. This way you're kind of stuck with that half now is your core position. But this is my thinking here. That the monthly chart, I'm trying to just squeeze going all the way back. Yeah, the monthly chart is on leg C. Everything about it seems that the structure of the company is working well. I'm going to recommend, even though it's leg E in the daily, leg D in the weekly, that you keep that core position and that you think of it as wanting to have a pullback. Now, sometimes you don't, you get what you wish for and then you regret that. But yeah, you do. You want to keep that core position and preferably try to put back at least part of that half that you took off somewhere between 11:20 and 10:30, maybe 10:50. And if it doesn't break 1080 in the next 2 weeks, that's going to be fantastic. My suspicion is that it could. So you say to yourself, gee, it's at 13 right now. Why would I not take the whole thing off? Because we've got 15 cents or 20 cents to go when I'm risking a point, maybe even a point and a half. So that's something that you want to think of, because I don't know where you got in at. But if you got in much, much lower down, then I think it behooves you to at least keep a core position, even if you want to take another little bit off that half and think of putting it back, because biotechs can have vicious pullbacks and vicious rallies. So my recommendation, kind of concurs with your thinking thus far. Take some off. You've already done that. You've taken off.
I'm in at a much lower level. I'm in the mid fives. I bought it well over a year ago. So
then you see, you bought it over a year ago. You've not sat through any vicious pullbacks or any serious pullbacks. I think I don't want to mess with your thinking at all. I think you've got yourself a beautiful position. You've got almost a triple. Let's call it more than a double. That's a fantastic situation to be in. I recommend you keep your core position and see where you can add back. And I'm even going to say to you, you know what? I'm giving you suggestions on where I think your gut feeling and your analysis is going to do you a better job of getting back in, if that's what you want to do, than if I just throw out a number, because it's going to be on. You're looking at it, you've got it every day, you're getting a feel for how it's acting or reacting when this general market pulls back. I suspect this will pull back as well, but my recommendation is that you keep your core and you try to put back at least a chunk of what you've taken off. And as someone said in the den, correct, you've got free shares. You can treat them as, this is, you've played it very, very well. So my recommendation, taking off, you've done. The other is the timing for the second part of the entry. I'm suspecting you want time. You don't want to pull back quickly and then think that's the time to get in. I think it needs a little time. I think it needs to make a cup formation. I wouldn't be surprised if it takes 3 to 5 weeks of consolidating and building up a really nice base, maybe between, I'm not sure just yet, but let's just say between 1050 and 980. And that's another way to do it. So congratulations. I don't think I want to even interfere with something that you've done so well with. I'm just giving suggestions that the area I'd be looking at, give it a little time rather than a quick pullback, because you've got on the weekly chart, you've got all the way into July, the first week of July. So give it a little time to pull back, let it breathe, see exactly where it's going to. The 10.88 level on the 9-period moving average, I'm sure a lot of people are now looking at this. 10.88 is the 9-period exponential moving average support, and 1032 is the 14-period. So that's the area I'd be looking at. Congratulations, okay, Travis, and thank you for calling and showing that to us.
Thanks, Basil.
Thank you. Now, a couple of little things. They're not little, actually. For me, it's very big. I've never done this before. I'm going to show this here. It's right on the front page of TFNN. If I can just find it. There it is. Look, right there. Come and see the Tiger Technicians Hour live. Tomorrow a week. I've done a lot of preparation for this. I'm still going to have to go through a couple of microphone tests and all sorts of things with our great engineers down in Florida. But I've already set it up, booked the screen, got everything, got the room. Newton, Massachusetts. I'm going to have, it's already starting to pick up. I've got a lot of people. I want more. I want more because I want you guys to meet one another, you guys and gals. I want you to meet one another. I want you to be able to say, hey, we do a little ChapmanWave, we do this, we do that. What do you do? Oh, great. Maybe we can meet, whatever. I don't care what it is. I'd like you to meet one another. I'd like to meet you. That's even more important. I want to meet you. So right there, 10 o'clock in the morning, we're going to meet for an hour. I'm going to give a presentation. I'll take a couple of questions. Mostly it's kind of a presentation. I'm going to go through some of the ChapmanWave methodology. I'm also going to discuss my CD, how you can use that, all these bits of information. This beautiful chart. Look at this. Let me just show it again. Look at that. I'll go back here. One. There. See, there's the chart with the left side, green, right side, actually red on the downside, green on the right side, with a vertical line, 90-degree line. 5 years on the left for gold when it went down from the 500 area down to 280, I think it was. And then 5 years it comes back, and it just misses by, no, exactly to the month. It goes at exact left side, right side price time to break that level. Look at the inside wedge. Look how I can use channels as well. So I want to just show some basic concepts which people ask me about. A lot of people say, hey, can we just, this is a free live workshop. So that's what I'm going to be doing, a couple of little points, then I'm going to discuss the market, of course. Now, what I need you to do, just go to the front page. Yeah, I'll just show you what we're going to do. This is in Newton, Mass. It's at, all we need for you to do, you can use your, oh man, this is what a perfect opportunity. Tiger Dollars. Enter the dollar amount you would like to spend, and we will give you 20% bonus match on top of that amount. Minimum purchase is $500. So that's one way to do it. We want you to be able to get some benefit. Also, money also goes to the Boston One Fund. Man, I tell you, they've done things at TFN. It's just fantastic. So that's not it. And so that is important. But what is important for me on my side, because I'm going to be doing this by myself, there will be no one from TFN in to help me. I need to have people just sign in. Just give me your basic information so that I know that you're there, and I can say to the folks at the Women's Club in Tom calls it the Tigresses Club, the Women's Club, one of the oldest clubs here in Massachusetts, Women's Club, and it's at Columbus Street. I had it right in front of me. Just let me give it to you right now. I'll give you the information. We've got time. It's at 72 Columbus Street, Newton Highlands, Mass. 02461. There won't be any telephone number, so I need to do this. I need to be able to tell them beforehand how many people are coming so they can prepare for it. And because this is something that I'm putting together, I will have no help per se. It's just chairs to sit on and me. Maybe there'll be some water. I don't know. This some refreshments kind of thing. I really don't have time for that. I just want to get going. We'll have an hour before my live show, 11 o'clock to 12. You and the audience will be part of my audience that takes for the Tiger Technicians Hour. I want to take questions, do them live. And the charts will be shown right here on TFNN. It'll be great. I'm really looking forward to it. And the other thing is, after we're done, I know there'll be questions. So we'll take a bit of a break as I'm wrapping up for my show, get my voice back. And you know what? Then I'll take some questions. And it's so convenient to get to. There's parking around there. If you get there very early, you need to get breakfast. There are places for breakfast. If afterwards you want to stay around, there are plenty of places to eat. Newton Highlands has it's a fabulous little town. We have 13 villages here in Newton, and this is one of them. This is one of the very quaint ones. They're all kind of quaint. Well, Newton Center's not quaint. It's kind of bigger, but this is one of the quaint ones. So I'd love to see, and what timing, because next week we're going to see whether or not the most important sectors that have been working right now are starting to fail. We're going to look at the sectors like those industrials that I've been talking about. We've picked up a couple of cyclical stocks that are actually doing well. Thank goodness, because my Dow, we got stopped out of my Dow short for about a 1.10 loss. You know what? I don't mind as long as the other stuff is really working and our longs are doing very nicely. That is the longs. That is the stocks that we have in a position that is stock-wise. So if they make more than making up for that, that's fine with me. So it's going to be a perfect time. I'm looking forward to seeing you, and I'm going to be mentioning it a lot, of course, because it is, to me, it's very important. Now, I've never done this live during the day. Done it in the evening. Did it in San Francisco. It was very successful. I loved it. I had a great time. Still get emails from folks that were there, questions and all sorts of things. So I'm hoping that we can set the same thing up here. And since it'll be local, it's going to be great to meet you all. So that'll be 10 o'clock to 1 o'clock. So the last hour from noon till 1, I'll be doing a question and answer. It won't be like the Tiger Technicians Hour. In this one, I'm going to be able to spend a great deal more time, or maybe even do a couple of quick little peek A to B to C to D of 5-minute charts or 2-minute charts. We'll see. All right. Now, I've got a question again about a biotech stock, I believe. I'll look at that when we get back, and then I'm going to give you a little market overview. I'll be back.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Basil Chapman, Tiger Technicians, our last segment we've got. And then I'm going to be doing Larry Pesavento's show. Of course, great honor and great stepping stone here. You've got to, I'm going to have to be very careful when I'm looking at what I'm looking at, because I've got to know the month that I'm looking at for the different futures contracts in the commodities. But I'll try to do commodities next because it's really important. I haven't had a good look at crude oil. I don't do, I just look at the contract, and I'm sorry. We've got Andy Hector does a great job talking about the forward contract, backwardation, contango, and all that stuff. I just don't do that. I only look at the chart pattern. So let's quickly look at this. INFI is Infinity Pharmaceuticals Inc. It was going actually to infinity when it went all the way to a peak F in the weekly chart, go all the way from down in the single digits to 50.51 back in March of 2013. Then it makes a double top, peak F, plunges. Now, what I've got here is a left side, right side price time match. It's trading down $1.85 at 23.28. What's really important about this is if you look at the monthly chart, it looks to me, I don't know anything about this company, but it looks to me like it's a pharmaceutical. It looks to me like it's a one-product company or whatever it is. Their major product is, they've just lost focus completely. And because of it, you've got to anticipate that the first really serious support level is at 21.40. It's close there, another $1.60 or so. Most important about it is that the MACD is very negative in the weekly chart. Stochastic's horrible. The stochastic in the monthly chart is still at 85%. So I would have, if you said to me and told me that there was a stock that was trading at 50, and the stochastic now is at 85%, and the MACD hasn't yet even closely seen the fast-moving cross under the slow-moving average, and you asked me where the stock would be because it's pulled back, I would have said, maybe it was since 50, I'd say, okay, 45.50 to 43.80. It's at 23.28. So something desperately is wrong. Now, I had a chance to make a left side, right side price time match today. We'll see. 21.40. That is really, I don't know if it's going to go to that low, but 24.90 was the previous low, and it's at 23.28. So there's really no room there. That's the level. But the stochastic is flattening out, and the MACD is okay, but there's nothing else that says that it's a buy. It's a buy, okay, but it's bye-bye, B-Y-E, B-Y-E. So I wouldn't mess around with this. This is in trouble. There's something desperately wrong with it. If we can have a decent pop at any point, I'd say just get out. 23, 31, boy, pop to 27, the 9-period moving average, or 31. I'd be getting out of this thing. So that's that. So be very careful with this. I wouldn't be buying it. Now, I just want to quickly do this because I'll go in more detail during Larry's show. Also, I'm going to mention once again, I really do want to mention this. You've got the Tiger dollars, and it's going to run out at the end of the week. You know, time's is flying by. So anyone that buys the Tiger dollars can get access to Tom's fabulous 6-hour, 2-part online trading class. I mean, come on. That alone is worth a bargain. That should be an enticement right there. So please go to the front page, check it out. Up to in every purchase, up to 10% will be going towards the one fund of Boston in the customer's name, in your name. So I think that's great. So please check it out. It is a way of getting the one discount you can get in the market is if you can buy something and immediately get a percentage as a bonus. And that's exactly what you do if you get Tiger dollars. And they're good. You can hold them as long as you want. Hey, if I do one of my Master Trader series and you're interested in it, boom, you could use them for that. So I want you to talk about this for a moment. 50,291 is now the 9-period exponential moving average in the S&P. It's in leg E up. There's absolutely no question that we will get a pullback. When and how. I'll spend a little more time on it in the next hour because now we can spend time on just looking at what ifs, and I'll go through those. Thanks for being here. I'll be back in another few minutes.